EP20, Bitcoin wallet labels. Explain the self-custody records that save future you. Your Bitcoin wallet can show you a balance. It can show you addresses. It can show you transactions. It can show you fees, but it cannot remember your intent unless you write it down. That is the quiet problem with self-custody. When everything is fresh, the wallet feels obvious. This withdrawal came from the exchange. This address is my cold wallet. This transaction was a test. This one was a consolidation. This one was a payment. This one was just me moving coins from one device to another. 2 years later, those same transactions can look like a pile of numbers. And 5 years later, when you sell, move, inherit, gift, consolidate, or explain what happened, the problem is not that Bitcoin forgot. Bitcoin did exactly what it was supposed to do. It preserved the transaction history. The problem is that the chain does not know the human meaning. That is what this episode is about. Wallet labels and self-custody records. Not as a nerd feature, not as tax advice, not as paranoia, as the boring system that keeps future you from staring at a wallet and asking, what was this? Last episode, we talked about UTXOs. Your wallet balance is not one smooth blob. It is made of spendable pieces. Those pieces can affect future fees, privacy, and record keeping. This episode is the next layer. If UTXOs are the receipt drawer under your balance, labels are the sticky notes you put on the receipts while you still remember what they mean. Here's the first receipt. A wallet label is not on the blockchain. Bitcoin Optech describes wallet labels as descriptions of addresses, transactions, and other information that help a user understand their past transaction history. The important part is that labels are not communicated to unrelated parties, and they are not stored in a public information source like the blockchain. That sentence matters. A label is local context. It is your private explanation. It is the difference between a transaction that says 1 million sats moved and a record that says exchange withdrawal from strike to cold storage, January test transfer, confirmed before larger move. The blockchain has the facts of movement. Your label has the meaning. Do not confuse the two. If you label an address cold storage, that does not mark the blockchain forever. If you label a transaction test send, the network does not learn that phrase. The label helps you. It helps your wallet. It helps whoever has to understand your wallet later. And that later person might be you. Second receipt, labels are not balances. Bitcoin Core made this clearer years ago. Labels can be set on addresses. They help organize wallet history. But labels do not have their own balances, and assigning a label is not the same thing as creating a separate account with separate coins. That is a subtle point, but it prevents a lot of confusion. If you label 3 receiving addresses as cold storage, the label is an organizational note. It does not magically create a vault inside the chain. If you label something taxes, that label does not calculate your taxable gain. If you label something business, that label does not prove a deduction. Labels are not accounting by themselves. They are context. They are the table of contents for your own transaction history. Third receipt. The most useful label is usually boring. People want clever systems. They want color codes, complicated tags, and elaborate naming conventions. Fine. If that helps you, use it. But the minimum useful label answers 3 questions. Where did this come from? Why did it move? What should future me remember? That is it. Here are practical examples. Exchange withdrawal to cold storage. Test transaction before hardware wallet move. Monthly DCA withdrawal. Consolidation during low fees. Transfer from old wallet to new wallet. Payment to vendor. Gift to family member. Sale from cold storage to exchange. Inheritance planning wallet. Do not overthink the first version. A plain label today beats a perfect system you never use. Fourth receipt. Labels protect you from your own future confidence. There is a dangerous sentence in self-custody. I will remember. You probably will not. You will remember the big moves. You will remember the day you bought a hardware wallet. You might remember the first cold storage transfer. But you may not remember which withdrawal was the test, which one was the real move, which address belonged to the old coordinator wallet, which transaction was a consolidation, which payment was reimbursed, and which exchange account produced the CSV that matches the sale. That is where self-custody becomes a record-keeping problem. Not because Bitcoin is broken, because humans are noisy storage devices. Your future self needs less confidence and more notes. Fifth receipt. Labels and tax lots are related, but they are not the same thing. This is where EP18 and EP19 connect. The IRS Form 8949 process cares about things like date acquired, date sold, proceeds, cost or other basis, adjustment codes, and gain or loss. Your wallet label does not replace that. A wallet label can help you understand what happened. It can help you connect a blockchain transaction to an exchange record, a spreadsheet row, an invoice, or a note. But a label is not a cost basis method. It is not a legal conclusion. It is not a tax return. It is evidence support. It is context that makes your actual records easier to trust. Think of it this way. The transaction ID tells you that movement happened. The wallet label tells you what you thought the movement was. The exchange export, receipt, invoice, or spreadsheet tells you the financial details. The tax form is downstream of all of that. When those pieces agree, life is easier. When they do not, you find out early instead of during a deadline. Sixth receipt. Good labels are private, but privacy still requires judgment. Because labels are local, they are not automatically broadcast to the network. That is good. But do not let that make you careless. Some wallets sync labels across devices. Some people back up wallet files to cloud storage. Some people export transaction histories and email them around. Some people put sensitive names into labels that would be awkward if the backup leaked. A good label should be useful without becoming a diary of your entire life. For example, cold storage withdrawal is usually safer than just an inheritance stack for mom and dad. Business payment is usually safer than naming a specific customer if you do not need the name inside the wallet. The goal is enough context to be useful, not enough detail to create a new privacy problem. Seventh receipt. Backups matter. A label that lives only on one laptop is not a record-keeping system. It is a note waiting to disappear. Your seed phrase protects access to the coins. It does not necessarily protect your labels, your notes, your exchange exports, your spreadsheets, your invoices, or your cost basis records. That distinction is critical. Recovering a wallet from seed can restore control over coins, but it may not restore every piece of local metadata that helped you understand the history. So ask a simple question. If this device died tonight, would I still understand my wallet history? If the answer is no, the problem is not the seed. The problem is the paper trail around the seed. Here's what this looks like in real life. Imagine 3 ordinary transactions. Transaction 1 is a small test withdrawal from an exchange to your hardware wallet. On-chain, it is just an amount moving to an address. In your record, the useful label is test withdrawal from exchange to cold storage. That tells future you why the amount is small and why it happened before a larger move. Transaction 2 is the larger withdrawal. On-chain, it is another amount moving to another address. In your record, the useful label is main cold storage withdrawal after test confirmed. Now those 2 transactions tell a story together. Test first, then real move. Transaction 3 happens months later, when fees are low and you consolidate a few small pieces. On-chain, it may look like several inputs combined into a new output. In your record, the useful label is intentional consolidation during low fee window. That tells future you that it was not a sale, not a payment, and not a new purchase. It was wallet maintenance. None of those labels need to be fancy. They just need to preserve the reason. That is the difference between transaction history and financial memory. Transaction history says what moved. Financial memory says why it moved. You want both. There is also a family version of this problem. If someone else had to help you later, could they tell the difference between your exchange deposits, your long-term cold storage, your old wallet, your test transactions, and your real payments? Or would they open a wallet and see a list of addresses with no human meaning? This is where the boring work becomes kindness. Clear labels and separate records are not just for tax season. They are for emergencies, inheritance, device failure, exchange shutdowns, and the day you no longer remember every move with perfect clarity. You do not need to write a novel. You need enough breadcrumbs that the next responsible person is not starting from zero. Eighth receipt. You do not need a perfect system. You need a repeatable one. Here is a simple monthly routine. First, export exchange records while the exchange still exists and the account still works. Second, label new wallet transactions while you remember them. Third, Save transaction IDs for meaningful moves. Fourth, keep a separate record of purchases, sales, transfers, gifts, and payments. Fifth, back up the record somewhere your future self can actually find. That is not glamorous. It is not a trading strategy. It will not make a good influencer clip, but it is the kind of system that stops self-custody from becoming archaeology. Ninth receipt. The point of self-custody is not to become your own confused bank. It is to reduce dependence on institutions without losing your own ability to explain what happened. That means you need two things at the same time: control and clarity. Control without clarity becomes chaos. Clarity without control can still leave you dependent on a custodian. Bitcoin gives you the ability to hold the keys. It does not automatically give you good habits. That part is on you. So here's the rule. If a transaction would confuse you 6 months from now, label it today. If a transaction affects taxes, inheritance, business records, or a major wallet move, keep evidence outside the wallet too. If a note is sensitive, make it useful but not unnecessarily revealing. If a record only exists in one place, assume it can disappear. And if your wallet history already feels messy, do not panic. Start with the next transaction. Label the next withdrawal. Save the next export. Write down the next reason. Clean records are built one boring action at a time. That is the whole point of this series. Bitcoin rewards people who understand the structure before it becomes urgent. UTXOs are the pieces. Labels are the memory. Records are the proof. Your balance is the headline. Your labels are the captions under the receipt drawer. Next episode, we are going one layer deeper into a transaction detail that confuses almost everyone: change outputs. When you send Bitcoin, the leftover amount often comes back to you at a new address. If you do not understand change, your wallet history can look stranger than it really is. Educational only. This is not financial, tax, or legal advice. Keep your own records, protect your privacy, and ask a qualified professional about your specific situation.